1980. The Hunt brothers tried to corner the silver market. Price hit $50 an ounce, then collapsed. Regulators stepped in, markets panicked, and silver got a reputation it never shook off. Volatile, speculative, dangerous. 31 years later, 2011, silver ran back up to $49, almost touched 50 again. And again, it collapsed. Same ceiling, same rejection, same story the financial media repeated for decades. Silver is fool's gold. 2 spikes, 2 crashes. Same price. 44 years apart. That $50 line became a wall. Not because of fundamentals, not because of supply or demand, because of memory. The market remembered the pain, and every time silver approached that number, traders flinched. So for over 4 decades, silver sat between $15 and $30. Quiet. Ignored, while gold tripled, quadrupled, made headlines. Silver just sat there. But something was building underneath, that nobody in mainstream finance bothered to measure. Silver isn't just a precious metal, it's an industrial commodity. And that distinction changes everything about how supply and demand actually work. 70% of the world's silver comes as a byproduct. Not from silver mines, from copper mines, lead mines, zinc mines. When a copper company digs for copper, silver comes out as a side effect. This means silver production doesn't respond to silver prices. If silver doubles overnight, you can't just open more silver mines. The supply is structurally locked to other metals. Hold that thought. Now look at what happened to demand. In 2014, the solar industry consumed 5% of global silver. Each solar panel needs about 20 grams of silver paste on its silicon wafers. There's no substitute that conducts electricity as well. By 2024, solar consumed 19% of all silver produced on the planet, nearly 4 times the share in 10 years. Electric vehicles use between 25 and 50 grams of silver each, 67 to 79% more than a gasoline car. Every data center running AI workloads needs silver in its circuit boards, its thermal management systems, its high-speed networking equipment. The Silver Institute, not an opinion blog, the actual industry research body, published their 2025 World Silver Survey. Industrial fabrication demand hit a record. 680.5 million ounces in 2024. That's 59% of total consumption. A decade ago, it was 50%. And here's the number that should stop you cold. Between 2021 and 2025, the silver market ran a cumulative deficit of 820 million ounces. 5 consecutive years where the world consumed more silver than it produced. 820 million ounces of deficit is roughly equal to 1 full year of global mine production gone. Where did the metal come from? Existing stockpiles, recycled silver, ETF inventories being quietly drained. The market was burning through its reserves and the price barely moved because of that $50 ceiling. Because traders kept flinching at a number that hadn't been relevant for 4 decades. Until they couldn't flinch anymore. October 2025. Silver broke through $50 for the first time since 1980. No single event caused it. It was pressure that had been compounding for 5 years, finally exceeding what the market could absorb. Solar installations kept growing. EV production kept climbing. Data centers kept multiplying. And the deficit kept widening. But there's a detail most coverage missed. In early 2025, China, one of the largest silver refiners on Earth, quietly changed its export rules. Starting in 2026, companies need government licenses to export silver. Only 44 companies qualified. Minimum requirement: 80 tons of annual refining capacity and a credit line above $30 million. This didn't make front pages, it didn't trend on financial Twitter, but it tightened global physical supply at exactly the moment demand was accelerating. Once silver cleared 50, there was no technical resistance above it, no historical ceiling, no price memory to trigger panic selling. 44 years of accumulated energy released into open air. By December 2025, silver closed the year at roughly $70 an ounce, a 147% gain, the best annual performance for silver since 1979. January 29, 2026, silver hit $121.67, a new all-time high. Then it pulled back 13% in a single session as profit-taking kicked in, settling around $100. The move from 30 to 120 in 14 months wasn't a bubble. It was a repricing. The market spent 4 decades pretending the fundamentals hadn't changed. Then it corrected, violently, and all at once. As of late January 2026, silver trades between $85 and $92 an ounce. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, dropped from over 100 in April 2025 to roughly 50 today. Historically, that ratio averages between 60 and 75. At 100, silver was deeply undervalued relative to gold. At 50, it's closer to fair value. But the industrial demand picture hasn't changed. The Silver Institute projects a 5th consecutive year of structural deficit. Industrial fabrication is on track to surpass 700 million ounces for the first time. Solar demand alone could reach 250 million ounces annually by 2030. Citigroup analysts project silver at $100 per ounce in the first quarter of 2026, citing geopolitical risks, physical market shortages, and uncertainty around Federal Reserve independence. Gold Silver's lead analyst expects the price to increase by over $100 per ounce through the year, potentially reaching $175. The more conservative forecasts, Bank of America at 65, UBS at 60, were published before the October breakout. Those numbers are already in the rearview mirror. Now, there's something preppers figured out years ago that Wall Street still ignores. Silver isn't just a financial asset, it's antimicrobial. It kills bacteria, fungi, and yeasts on contact. Medical applications include wound dressings, bone prostheses, catheters, surgical tools. A silver coin dropped into a water storage container keeps the water biologically stable for months without chemicals. The military and emergency medicine have used silver-based treatments for decades. Preppers stockpile it not because of price charts. They stockpile it because it's a durable, reusable medical supply that doesn't expire. Unlike antibiotics, unlike bandages, unlike iodine tablets. Silver is the only asset that functions as both money and medicine. The financial world prices it as a commodity. The survival world prices it as infrastructure. Both are right, and neither is looking at the full picture. Two forces are now competing in the silver market, and understanding them determines whether this is an opportunity or a trap. Force 1, structural demand. Solar, EVS, AI data centers, military applications, medical technology. None of these are cyclical trends. They're infrastructure build-outs that will take decades. The International Energy Agency projects solar installations above 500 gigawatts per year by 2030. Each gigawatt needs silver. There is no commercially viable substitute at scale. Force 2. Supply inelasticity. You cannot open a silver mine in response to price signals because 70% of silver production is a byproduct. Even at $120 an ounce, a copper miner's decision to expand production depends on copper prices, not silver prices. This structural lock means deficits can persist for years, possibly a decade, before supply catches up. If it catches up at all. The risk? Silver just did 147% in 1 year. A 30 to 40% pullback from here would be historically normal after a move this size. BCA Research's chief strategist remains long-term bullish, but warns the probability of a significant retracement has risen. If the Federal Reserve hikes rates in 2026, silver prices will likely drop. Dollar strength is silver's enemy. So this isn't buy everything right now. This is understand what you're looking at. A metal that was suppressed below $50 for 4 decades, while its industrial utility multiplied by a factor of 10. A supply chain that physically cannot respond to demand. A deficit of 820 million ounces that hasn't been replenished. A Chinese export restriction that tightened supply at the worst possible moment. And a breakout that erased 44 years of technical resistance in 14 months. The window isn't about price, it's about information. Most people still think silver is $30. Most people still think it's a speculation for doomsday preppers. Most people haven't read a single page of the World Silver Survey. You just did. The numbers are public. The deficit is documented. The demand drivers are measurable. What you do with that is yours to decide. But you can't say you didn't see it.